All right, ready to dive in. We're looking at Epack Durable Ltd. They're making some serious moves in the Indian consumer durables market.
Definitely a company to watch, especially with all the changes happening in India right now.
You sent over their Q2 financials for fiscal year 25, an investor presentation, even a letter to the stock exchanges. Feels like we've got a lot to unpack.
Yeah, should be an interesting deep dive.
For those just tuning in, Epack specializes in manufacturing, well, mainly air conditioners and small appliances. Stuff like mixer grinders, those induction cooktops that are getting popular
They've been around for a while though, right?
since 2003. But what's really got my attention is their role as an original design manufacturer in ODM. Basically, they're the brains behind the air conditioners, the RACs, for some pretty big brands.
Like who?
Voltas, Hair, even Bosch and Philips. And this ODM model, it seems to be right in line with how India's policies are shifting. You can see it reflected in their Q2 results.
Absolutely. Their revenue has jumped like crazy, up 112% year over year.
Wow, 112%. That's huge.
It is. They hit 3,771 million Indian rupees. Longer summer this year, plus just more demand overall. And it looks like they've snagged some new clients too.
That all makes sense, but there's a twist, right?
There is. Despite the huge revenue jump, they ended Q2 with a loss. 85 million Indian rupees.
A loss. But the first half of the fiscal year looks so good, didn't it? Something like 87% revenue growth, good EBITDA, even a profit of 149 million Indian rupees.
Yep, it does make you wonder what happened in Q2.
Like they hit a wall or something. Maybe some big investments that are going to pay off later but hurt them in the short term. Or could it be something more, I don't know, systemic?
Well, speaking of systemic, we should probably talk about those government policies you mentioned. India really flipped the script on the consumer durables industry. Seems like Epack landed right where they needed to be.
Yeah, it was like, boom, everything changed.
It really was. First, they made it mandatory for all air conditioners, the RACs, and all their parts to have this BIS certification, the Bureau of Indian Standards certification. That was a big deal.
Definitely shook things up, made it way harder for companies to just import finished products from, I don't know, wherever.
Exactly. It gave domestic manufacturers like Epack a big advantage.
And then they went even further. They banned importing those gas-charged AC units completely, like the ones already filled with refrigerant.
That pretty much forced those international brands to start manufacturing in India if they wanted to keep selling there.
It's like India said, okay, you want to play in our market, you got to play by our rules.
Exactly. And then they rolled out the Production-Linked Incentive Scheme, or PLI.
Okay, what's that one?
This scheme offered incentives to companies that manufactured components in India, not just assembling them here, but actually making the parts.
So brands weren't just putting things together, they were sourcing locally.
Right, and that benefited companies like Epack who could provide those locally sourced parts.
Okay, I'm seeing the strategy here, but is it sustainable? I mean, what happens when those government incentives disappear?
That's a good question.
And let's not forget that Q2 loss. Could that be a sign of trouble brewing?
That's the million rupee question. But Epack does highlight some of their strengths in their investor presentation. They are vertically integrated, which basically means they control a lot of their production process themselves.
From the components to the finished product.
Yep, which helps them keep costs down and react quickly to changes, which in this industry is crucial.
I see what you mean. But didn't they also take on more debt to fund all this expansion? Their debt-to-equity ratio seems to have gone up. Isn't that risky, especially with that dip in profitability?
It is a risk, for sure.
Yeah.
They're walking a tightrope, using debt to try and fuel growth. A high debt-to-equity ratio can definitely be a red flag. But for a company that's growing fast, especially in a capital-intensive industry like this, is not necessarily unusual.
I guess that makes sense. So the real question is, can they actually generate enough cash flow to handle that debt comfortably?
Exactly. That's something we'll need to look into.
Okay, and they keep mentioning those customizable solutions in their materials. Sounds good on paper, but what does that actually mean for their clients? Do we have any examples of how this flexibility actually helps them?
Well, they worked with a brand that's targeting that, rapidly growing mid-tier market in India.
Okay, so what did they do?
Epack designed an energy-efficient air conditioner specifically for smaller spaces at a lower price point, something their competitors weren't really offering. This helped the brand capture a good chunk of the market and really solidify their position.
So Epack's ability to adapt their designs in production to meet their clients' specific needs, that's a real advantage, huh? Especially in a market as diverse as India.
It is. It's a big differentiator for them.
Now that's what I like to hear, a real-world example of how they're using this adaptability. But they're not just catering to clients, are they? The financial reports mention that they've increased their stake in an associate company, Apavo Electrical.
Oh yeah, they've gone from owning 26% to a 50% stake. They did it through a rights issue.
And Apavo, they make what?
Water heaters and fans, mainly, which aligns with Epack's diversification strategy. They're
Mhm.
trying to get into new product segments.
Makes sense considering the competition in that air conditioner market. But hold on, didn't I read something about Apavo having some issues? Something about taxes?
You did. The reports say that the Income Tax Department conducted a search and seizure operation at Apavo back in November of 2023.
Okay, so what happened?
It's still ongoing. There hasn't been any formal communication about the outcome yet, so it's kind of just hanging out there.
Wow, so we've got this high growth, ambitious company with what could be a risky expansion strategy, and now their associate company is facing a tax investigation. This is getting interesting.
It is. Epack's journey is a good reminder that even when things seem to be going great, there can be hidden challenges lurking around the corner. It'll be fascinating to see how this plays out. Can they navigate these potential obstacles successfully?
I'm definitely curious to find out. Feels like we've only scratched the surface. I'm ready to go deeper. How about you?
Let's do it. Welcome back. Hope you're ready for more on Epack Durable.
Definitely. That tax investigation into their associate company, Apavo, kind of left us hanging, didn't it?
Yeah, makes you realize there's always more to the story, huh?
Absolutely. But before we get too sidetracked, let's dig into their financials. That's what we're really here for.
All right, let's see what the numbers tell us. Their H1 FY25 consolidated income statement, that's for the first half of the fiscal year, shows their core operations are doing really well. Operational income, mainly from their air conditioners and components, it's up a huge 87% year over year.
That's massive.
It is. And their EBITDA margin, even though it's down a bit from last year, it's still at 5.34%.
So they're still making a decent profit, even with all that expansion they're doing.
It seems so. But let's look closer at that Q2 performance. Revenue growth was incredible, 112%, but they still posted a loss.
85 million Indian rupees, right?
Yep, quite a difference compared to the 61 million rupees profit they had in the same quarter last year.
Yeah, that's a big swing. Any clues as to what happened?
Well, if you look at their expenses, there's a significant jump in almost every category. Cost of materials, employee benefits, even finance costs, they all went up.
Could they be going through those classic growing pains? Expanding fast, but their costs are rising even faster than their revenue.
Could be. It's pretty common for companies in a high-growth phase. Their investor presentation does emphasize cost efficiency as one of their strengths, though.
Right, they do talk about that a lot. So the question is, can they keep those costs under control while they're growing this quickly?
Exactly.
Their debt-to-equity ratio also stands out. It's gone up since last year. Now, I get that they're investing heavily in new facilities and product development, but isn't more debt kind of risky? Especially when their profits are taking a hit.
It's a balancing act, that's for sure. They're betting that future growth will make up for the strain they're feeling right now. And their investor presentation paints a pretty optimistic picture of the future. They highlight their product development capabilities, strong relationships with clients, and their ambition to, well, basically dominate the entire air conditioner and small appliance market in India.
So they're confident, but is the market going to play along?
That's the unknown. What if those new products they're banking on don't sell as well as they hope?
Well, they are launching a new line of those inverter and fixed speed air conditioners. Those seem to be getting really popular in India.
True. Tapping into those changing consumer preferences and the demand for energy efficiency is smart. But they're not the only ones doing it. Competition is getting intense.
Yeah, both from those domestic rivals and international players, right?
Right. EPAC's got to stay ahead of the game if they want to keep winning.
Absolutely. What about their expansion strategy? They've got those new manufacturing facilities in Bhiwadi and Scricity. Those are big investments. What's the thinking behind those locations?
Well, Bhiwadi, it's in Rajasthan. That puts them closer to that northern Indian market, which is a big consumer base for their products.
Okay, makes sense. And Scricity.
That's in Andhra Pradesh. Gives them access to the southern market and potentially opens up opportunities for exporting too.
So they're not just thinking about India anymore. They want to go global.
Their investor presentation definitely suggests they have global ambitions. But going beyond to India, that comes with a whole new set of challenges. Different regulations, different consumer preferences. They'll be up against some established international players.
A lot to handle. And with that tax investigation hanging over Apavo, do they even have the capacity to manage all of this at the same time?
It's a lot to juggle. Rapid expansion, maintaining profitability with those rising costs, and now this investigation. all while trying to stay ahead of the competition.
It's a high wire act for sure. Anything in these documents, change your own understanding of the consumer durables market.
What really struck me is how closely tied business strategy is to, like, the bigger picture, the economy, the political landscape. EPAC's success is connected to India's economic growth and the decisions the government is making. It makes you think, are they really in control of their own destiny? Or is their fate tied to things they can't control?
That's a good point. Their success is built on a growing middle class with more money to spend, a climate that's driving demand for their products, and government policies that are making it easier for them to manufacture in India. But what if any of that changes?
It's a good reminder that even the best plans can be disrupted by things outside your control. Maybe that's the biggest takeaway from all of this.
I think you're right. This sets us up perfectly for our final part. We're going to zoom out and look at the bigger implications of Epack's story. What can their journey tell us about the future of the consumer durables industry, not just in India, but globally? Back for the final part of our Epack Durable Deep Dive. We've gone through their financials, their strategy, and even found some unexpected twists.
Yeah, definitely some surprises there.
But now I want to step back, look at the bigger picture.
The panoramic view.
Exactly. We've been focused on Epack's specific moves, but their success, it's really connected to these bigger economic and social changes happening, like the rise of the Indian middle class.
Yeah.
That's been driving growth across so many sectors, consumer durables included.
Yeah, it's like a rising tide lifts all boats.
As people have more money to spend, products that used to be considered luxuries, they become necessities. Air conditioners, refrigerators, washing machines, they're not just status symbols anymore.
They're part of a comfortable modern lifestyle.
Exactly. And this increase in purchasing power leads to more demand, which creates a perfect environment for companies like Epack to thrive.
They've really focused on offering those affordable, high-quality products, and they seem to have a really good understanding of the Indian market.
Yeah, they're in a good position to take advantage of this trend, but it's not just about economics, right?
Nope, the climate plays a role too.
India's summers, they're getting more intense, hotter. Air conditioners are going from a luxury to a necessity for a lot of people.
Definitely, and you can see that reflected in EPAC's numbers. Their air conditioner segment is doing really well. It's likely to be a major growth driver for them in the coming years.
But this growing market, it's attracting attention. It's not just domestic players like Epack anymore.
Nope, international companies are seeing the potential too.
So the competition is heating up.
It is, and that competition is pushing innovation. Companies are trying to offer better products at better prices, constantly looking for new ways to win over those Indian consumers.
And Epack, they seem ready to fight for their share. They're investing heavily in research and development, expanding their product line, building new factories. They're even moving into new segments, like those electrical appliances, through their investment in Epavo.
It's a bold strategy. It definitely shows they're hungry for growth.
But this kind of rapid expansion, it comes with risks, right?
Of course. Managing that kind of growth can be tough. There's always the chance they could make a mistake.
Their management team does have a lot of experience, though.
Yeah.
They've been navigating the Indian market for over 20 years. They've seen a lot.
They have. And they seem to be good at making strategic decisions.
But even the best captain can't control the weather.
Exactly. Those external factors, government policies, the global economy, even just unexpected events, those can throw a wrench in the best laid plans.
That tax investigation into Epavo, that's a perfect example. It shows that even successful companies can be vulnerable to things they can't predict.
Epack's story really highlights that success in business is never guaranteed. It's a combination of strategy, adaptability, and, yeah, a little bit of luck.
So what's next for Epack?
Well, if they can keep this momentum going, navigate the competition, and manage those external pressures, they have the potential to become a real force in the global consumer durables market.
They've definitely got the brand recognition, the manufacturing capacity, and the leadership to do it.
They do, but the road ahead is long, and staying on this path will require focus, flexibility, and probably a bit of that luck we talked about.
Makes you wonder, is Epack's success really all their own doing, or are they just riding a wave of good fortune that could disappear at any moment? I'll leave you with that thought.
Yeah, it's something to think about. Business, it's rarely a straight line. It's more like a complex ecosystem where all these different factors come together to create both opportunities and challenges.
Well said. Epack Durable's journey, it teaches us something important. Understanding how internal strategy and external forces interact, that's crucial for navigating the business world.
Couldn't agree more.
Thanks for joining us for this deep dive into Epack Durable. We've looked at their numbers, their strategy, their future prospects. It's a story about ambition, growth, risk, and the need to adapt in a world that's constantly changing.
We hope you found it insightful, maybe even sparked your own curiosity about what's shaping the business world around us.
Keep exploring, keep questioning, and keep learning. Until next time.